The car industry in America is at significant risk of collapse. The automotive sector has been one of the drivers of the U.S. economy. However, with current economic problems, the prices of used cars have been quickly decreasing. The situation may favor buyers who now would buy the car of their dream for less money than before. But it is only an illusion, as although the prices of vehicles have dropped, the affordability of a car has not. So, diving deep into the subject and understanding what is going on is a must. But before we continue the analytical journey, consider subscribing to the channel so that you always follow the fascinating economic trends in the world. Automotive industry in U.S. The car industry prices are a concern for the U.S. economic stability. In American culture, a car is the core of the household's financial stability. Moreover, the number of motor vehicles in the country exceeded 282 million in 2021. This includes passenger cars, motorcycles, trucks, buses, and other vehicles. Since the 1990s, people have been buying more and more vehicles. Interestingly, the number of registered light vehicles per licensed driver first touched 1.0 in 1978, implying that Americans owned one car per licensed driver. This rate continued to grow until the peak of 1.15 in 2001, according to Deloitte. Thus, Americans have been less interested in cars for the last 2 decades. If over 133 million cars have been registered in the U.S. at the beginning of the century, 20 years later, the number plummets to 105 million automobile registrations. Economic-wise, the automotive industry generated revenue of $1.5 trillion US, while employing over 990,000 employees in the manufacturing sector, and automobile dealers employ more than 1.2 million workers. Used car market. While the numbers presented may look like the situation is not bad, the industry's crucial part is the used cars market. In 2022, the volume of used cars sold has dropped by almost 11% to 36.2 million from 14 million vehicles in 2021, which is nearly a decade record slide. Such a decline in demand has logically caused the prices of used cars to crash. The disruptions in supply chains during the pandemic have caused prices to soar temporarily, and as of June 2021, used car prices were 45% higher. However, 12 months after, by June 2022, the prices for used vehicles have seen the most significant decline since 2009. In just 1 year, the prices went down from a record high increase of almost 50% to a record high decrease of 8.8%. According to the Forbes article, used car prices post biggest drop on record and have much further to fall, released in January says. According to the Manheim Used Vehicle Price Index, used vehicle prices in the U.S. increased 0.8% from November to December, but plunged 14.9% from 1 year prior. SUVs were among the vehicles posting the biggest annual price declines, falling 16.6%, while mid-size cars fell 15.8% and luxury cars fell 15.2%. In terms of money, the average price of a used car is over $600 US, less in February compared to January. For example, according to Kelley Blue Book and Cox Automotive, in January, list prices for used vehicles averaged $26,510 US, while in September, it was almost $2,000 US more, $28,266 US. A happy average citizen must rush to the dealership and get a car, one might think, but not so soon. Although prices on second-hand cars have plummeted, consumers won't find it cheaper to buy the vehicle they want. Apart from the car price itself, the buyer must take into account loan expenses, which have been consistently rising. For instance, with a perfect credit score of 750 or higher, the interest rate on a used car would be 8.85% and drastically increase as the credit score number goes down. In the current economic situation, when the country is fighting high inflation, the Federal Reserve's policy to raise interest rates certainly is not helping the average buyer who may have encountered lower prices on used vehicles, but ended with a more expensive purchase due to a costly loan. According to Federal Reserve's recent steps in February, aligning with market expectations, the rate-setting Federal Open Market Committee boosted the federal funds rate by 0.25 percentage point. That takes it to a target range of 4.5% to 4.75%, the highest since October 2007. And it should be noted that this is only the beginning, as the agency is expecting a further increase. In the end, this creates a stalemate for Americans who need to buy a vehicle and hits the industry hard because the sales of used cars are declining. This indeed puts the used car market in a weird spot. In fact, ironically, the auto industry is one of the main culprits of the terrible economic situation in the U.S. For the last 18 months, industry's unstable price range, mainly due to supply chain disruptions, caused the crisis where we are right now. However, some market analysts hope that it will get better. According to Bloomberg's article, the auto industry is the economy's best hope right now shows that there are some hopes. However, the consumer and car dealers who want their cars sold and bought may be frustrated. The general midterm trends are not promising either. According to the study, the used car market will only start to recover to its previous number in 2025. In 2019, before the pandemic, the fleet of used cars exceeded 13.1 million vehicles. However, in 2020, the number significantly dropped to 11.6 million, and the market shrunk even more to 9.5 million cars in 2022. The analysts thus say that inventory is expected to inch up slightly in 2024, with 9.6 million used cars available, and in 2025, that number is expected to hit 10.2 million, still lower than the pre-pandemic supply. Apart from increasing loan expenses that discourage buyers, the shortage of vital components affects the second-hand car market. The supply of semiconductors has been shaky due to the halt of production in China. Although supply chains have started to restore, some automakers had to stop production in November and December. If the economic crisis continues, average households cannot afford a family car. In the used car market, car dealer companies may be happy about recently rising prices. According to data from Manheim, the largest wholesale automotive marketplace, prices jumped 4% in just the last 2 weeks, an unusually large increase in such a short time period. But if interest rates remain high, with high inflation on food and rent, families will likely refrain from car expenditures, thus prolonging the already dire economic environment. New car market. What about new cars? Sellers and buyers find themselves in an even more precarious situation when it comes to new vehicles market. The average monthly payment on a new car has been rising for the last 7 years. 2015, the buyer could get a new vehicle for around $550. In September 2022, the average monthly payment on a new vehicle loan was over $700. According to the data provided by Edmunds, the average annual percentage rate on a new vehicle loan rose to 5.9% in September, from 4.1% last December, and the amount that buyers financed for a new vehicle reached an all-time high of $41,347, compared to $38,315 in 2021. However, experts from Cox Automotive have horrible news for millions of would-be buyers of new cars. According to their estimates, the average price of a new vehicle was around $50,000. Plus, in 2021, only 8.3% of borrowers had to pay over $1,000 a month, while in the third quarter of 2022, the number of people paying $1,000 or more rose to 14%. In addition, the National Automobile Dealers Association, NADA, recently reported light vehicle sales at 13.7 million units, down 8.2% from 2021. The last couple of years have been very grave for car manufacturers. Experts generally note 4 factors that affect new car prices: inventory availability, manufacturer incentives, dealer discounts, and trade in vehicle value. Significant disruptions occurred in all 4 aspects. However, Cox Automotive data analysis shows that brands like Jeep, Buick, Volvo, Chrysler, Dodge, Jaguar, and Ram offer plenty of new car stock, while others' inventory levels still sit well under normal, like Toyota, Kia, Honda, Lexus, Land Rover, BMW, and Subaru. In the end, the turbulent condition of the auto industry in the U.S. has shown that the economy is in a deep crisis that has no solution in the short term. A vicious cycle of high interest rates and high prices on new cars makes it impossible for an average American to buy one. And although prices of used cars have dropped, expensive car loans prevent buyers from purchasing. Thank you for watching. If you enjoyed the video, hit the like button and subscribe to the channel.